Not only are these unprecedented times, but these are also times of disruption. Whatever expectation we had of revenues, growth, or margins, it's all gone awry. With that premise, today I'll share with you 3 out of a total 10 sound companies that are incredibly well managed and also meet certain important criteria and parameters, making them worthy of your consideration. If you want the entire list of 10 sound companies, all you have to do is share this post on your story, tag me, and I'll send you the list of sound companies in your DMs with all the relevant and important parameters that the company meets. Experts are certainly looking at companies with incredibly strong and solid cash positions. Cash is king. Why and how is cash king? Well, it's king both for the individual and for the corporation. Let's talk individual first. If you're an individual with a great cash position at this time, you can pick up stocks and shares in your favorite companies at bargain. More importantly, talking corporations. A corporation with a great balance sheet and strong liquidity can pay its suppliers on time. So it gets its raw material not only on time, but at good prices. It can pay its distributors to push goods effectively and again on time. It can support its share price by initiating buybacks and maintaining the dividend yield, which every company is going to find difficult to maintain. Further, not only can it overtake some distressed assets at a good price in these times, but it can also undertake organic expansion and eat into other companies' market share should the need so arise. So without further ado, the 3 companies that I'll discuss with you today are Siemens, Bosch, and Honeywell Automation. Why are these sound and incredible companies? Well, firstly, because their cash well exceeds their operating profit of even a year. That's great stuff. Their debt to equity is at levels that are deemed attractive. Their earnings per share has grown over the past 5 years. They have decent return on equity. And importantly, we'll see whether they're trading at attractive valuations. We'll look at their price to earnings ratio of today as compared to the price to earnings ratio of 5 years. Let's get into it. Let me also remind you that if you want the total list of the remaining 7 companies, 7 incredibly sound companies worthy of your consideration, share this post on your story. Don't forget to tag me and I'll send them in your DMs shortly thereafter. Now, doing a little comparison of the companies and taking into mind the parameters discussed, you'll see that each company has good amounts of cash when compared to its operating profit, especially for Siemens. It has cash of 5,000 crores. These companies are also trading at attractive valuations, especially if you look at Bosch and Siemens, well in discount compared to their 5-year historical average. Great debt to equity levels, almost negligible. They have grown their earnings per share over the past 5 years, pointing towards strong moats. Moats are something that Warren Buffett has loved over time, and of course, decent return on equity. So these 3 companies are certainly worthy of your consideration. Check them out. Let me see what you thought of the parameters and also see if you'd like the list of remaining 7 greatly sound, well-financed, conservative companies that are bound to even trump the distressed times of coronavirus. And of course, don't forget to like and share this with your friends and show some love. I'll see you guys around.